Robert Kiyosaki, the author of Rich Dad Poor Dad, predicts a coming market meltdown and asserts that these periods are the optimum for building wealth. In a recent series of tweets, Robert Kiyosaki raised the alarm about an impending market catastrophe and advised investors to seize opportunities that present themselves. All markets crashing: real estate, stocks, gold, silver, Bitcoin. Kiyosaki tweeted after the S&P 500 slumped 3.4% and Bitcoin tanked 6% recently. The author of Rich Dad Poor Dad and personal finance expert tweeted that he took out millions of dollars in loans to purchase real estate at deep discounts during the financial crisis. He still thinks the ideal moments to become wealthy are when asset values are falling. Last summer, Kiyosaki identified the biggest bubble in history and warned that after the Federal Reserve raised interest rates to slow the U.S. economy, it would be followed by the biggest crash in world history. He tweeted, "That crash is here." Millions would be lost, he continued, advising investors to avoid panic and instead take advantage of the deals being offered. In this video, we'll examine some of the major causes of the 2022 crypto market crisis. Stay with us. Emergence of cryptos. The emergence of cryptocurrencies in 2017 was a stunning phenomenon. Numerous cryptocurrencies saw their values soar to record highs. Many regarded this as a brand new chance to get rich quick. This surge, however, also brought forth some severe issues, such as hacking, fraud, and frenzied purchasing. These reasons collectively caused the significant cryptocurrency market fall of 2018. But it's still unclear what will lead to a fresh crypto bubble. However, since investors have been steering clear of riskier assets, cryptocurrency has been hammered particularly hard. Additionally, institutions and other major participants in the space that made investments close to the market's peak are under pressure as a result of the decrease in cryptocurrency prices. Investing in cryptocurrencies has never been for the timid. Digital assets are highly erratic, and similar changes have occurred in the past. What's going on with cryptocurrencies and the market crash? The best year to invest in cryptocurrencies was 2021. Despite Bitcoin's market value being about $3 trillion, it only had an all-time high of $69,000 in November 2021. However, the present year, 2022, turned out to be less advantageous. Cryptocurrencies fell below $2 trillion in January 2022, and from that point on, everything went downward. With the exception of a minor rebound in April, the markets for cryptocurrencies hit a fresh low of 2022 in June. The cryptocurrencies markets are tumbling. The value of cryptocurrencies declined by around $1 trillion between May and June 2022. After peaking at £49,838, $60,741 in November 2021, the value of Bitcoin fell dramatically, down to £18,976 on August 1, 2022. The value of the global crypto market has fallen to $977 billion, below the $1 trillion mark. After reaching $3 trillion in market capitalization in November of last year, the value of all cryptocurrencies has decreased by more than $2 trillion. Since their all-time highs, coin prices have decreased by 50% to 70%. But other tokens like Dogecoin, Avalanche, and Solana have been hammered even worse, losing up to 90% of their value in certain cases. The overall market value of cryptocurrencies is $860 billion as of right now. Causes of the 2022 crypto crash. The regrettable circumstances that led to the 2022 meltdown in the cryptocurrency market were ideal. The market crash was caused by a number of events, including global inflation, the Terra Luna crash, and an increase in interest rates by the U.S. Federal Reserve to control inflation. War-torn nations like Russia and Ukraine also contributed to the perfect storm that wiped out the cryptocurrency industry. Along with this, the prospect of many recessions in numerous important nations looms against the backdrop of a recovering global economy from the COVID-19 outbreak and rising inflation rates. The cryptocurrency market is frequently connected to the stock market, so if equities are in a decline, you'll probably observe a similar movement in the price of cryptocurrencies. Cryptocurrencies are impacted by a variety of variables that likewise influence the stock market. In January 2022, the Russian central bank suggested outlawing cryptocurrency mining and usage. This was because of the numerous hazards to financial stability and possible harm to the welfare of residents they presented. The Russian central bank also warned that regulating cryptocurrencies may jeopardize its control over monetary policy. Crypto law has not yet been introduced in India. It aims to outlaw the use of any private cryptocurrencies in the nation. Additionally, the nation has imposed a 30% tax on cryptocurrency investors and a 1% TDS on each intra-crypto trader. However, neither has India legalized nor regulated cryptocurrencies. Due to these difficulties, investors have found it challenging to determine whether or not investing in cryptocurrencies is the best course of action. Additionally, a currency's loss of confidence as a result of instability may make it appear unappealing to potential investors. Is cryptocurrency meltdown unique? Simply said, inflation affects the Bitcoin investor even though it may not have an effect on the decentralized structure of cryptocurrencies. The cost of living has increased along with energy prices, which has caused many investors to sell their cryptocurrency holdings. When U.S. cryptocurrency lending business Celsius Network betrayed investors' confidence by halting withdrawals and transfers in June 2022, this decline made news. But is this kind of conduct a risk associated with cryptocurrencies? Since it first entered the market in 2008, cryptocurrency has been distinguished by its exceptional volatility, which has led to many to perceive it as a high-risk investing area. Some investors in the cryptocurrency market may find the old saying, high risk, big gain, to be accurate. Numerous crypto bull runs, prolonged periods of time when stock values are rising, have occurred since 2008. Alongside this, there are fantastical tales of cryptocurrency investing success. For instance, in 2017, Eric Finman, who accepted a $1,000 present from his grandmother at the age of 12, put the entire sum into cryptocurrencies, became a billionaire by the time he was 18 years old. Finman's net worth is $5 million as of 2022. Those outlandish success tales encouraged many wealthy people to embrace cryptocurrency seriously, particularly Bitcoin. As a result, many people made investments in or founded businesses to mine the limited resource in an effort to profit from the frenzy. These investments were undoubtedly alluring during the Bitcoin bull runs and for experienced miners. This will not be the first crypto crash. However, in the dwindling cryptocurrency market of 2022, could the convergence of rising energy prices, inflation, and the overall decline in cryptocurrency value be too great a fall? More miners, more problems. Simply explained, Bitcoin mines are usually sizable storage facilities that store a huge number of tiny computers, also known as application-specific integrated circuits, ASICs, that are connected to the Bitcoin network and verify the blockchain by working through challenging mathematical calculations. Several ASICs must be powered, and the warehouse's temperature must be controlled for Bitcoin miners to operate efficiently. Despite the fact that mining seems to need little power, it actually does. These miners have had a difficult year prior to the energy pricing issue that followed the conflict in Ukraine. The number of Bitcoin miners has increased since the second quarter of 2021, making it harder and more competitive to mine the cryptocurrency. The hash rate, a measure of computational power per second used for cryptocurrency mining, increased between June and August of 2022, despite the value decline, suggesting the market will stay competitive. Even industry titans in the mining industry, including Core Scientific, Marathon, and Riot, have witnessed a more than 50% decline in market capitalization. This has prompted strategy revisions and hasty revisions to profit projections. After the crypto crash, Bitcoin believers are back to monitoring stocks. A well-defined decline channel is where active Bitcoin addresses are located. According to analysts at cryptocurrency researcher Glassnode, they introduced that network activities suggest that there remains little influx of new demands as of yet. The transactional demand, however, has recently moved in a sideways or downward direction, indicating that only the stable base of higher conviction traders and investors remain. On-chain transaction costs are also in bear market territory. If they start to rise, it may be a sign that the economy is starting to revive. The 2022 bear market has been historically negative for the digital asset space, the analyst mentioned in a note. However, after such a sustained period of risk-off sentiment, attention turns to whether it is a bear market relief rally or the start of a sustained bullish impulse. For Bitcoin, Ether, and other cryptocurrencies, July was a terrific month. The second-place token gained 70%, posting its highest monthly return since January 2021, while Bitcoin gained 27% for the month, the most since October. According to Crypto Compare, overall volumes of the Tether stablecoin for Bitcoin and Ether increased during the month, demonstrating that investors saw them as safer cryptocurrency markets. Even if the price of cryptocurrency has increased recently, it is still far below the heights it achieved at the end of the last year. Since November, when it was almost $69,000, Bitcoin has been circling about $24,000. Even attention-grabbing news like Coinbase's recent agreement with BlackRock haven't been able to awaken the coin from its lethargy and propel it higher. Crypto has more volatility, so therein is riskier, and it would make sense that investors need to rebuild confidence after the downdraft they've suffered through, said Katie Stockton, founder and managing partner of Fair Lead Strategies, a research firm focused on technical analysis. She did, however, add that cryptocurrency investors were drawing clues from the stock market and that there was a reciprocal link. Given that both are risk assets, it seems acceptable.